free, then I've got a mentorship session to help us through. All right, guys. So welcome on. I'm going to start. I see the thumbs up. So welcome, guys, as you come on. All right. So let's continue where we are. I won't even take too long with it. I'm going to start off with a couple of things that I was looking at, and then we'll take it from there. Now, the dollar index at the moment has come back to the equilibrium order block, which is a key thing here that I wanted to kind of look at with you guys. Now, if you remember the markings that I've had, then you understand why this equilibrium block is so important. Okay. This equilibrium order block is something that was formed in the price way before the price dropped down where it did drop down. Okay. And so seeing it come back to this area right here means quite some significant things for the price. Okay. Now, the equilibrium order block here, and this is a key right here, is going to be the threshold between going from premium to discount or discount to premium. And I'm going to put this here, equilibrium order block. I'm just going to call it OB for short. This is a supply equilibrium order block, but this was drawn, if you remember my mappings for this, a lot earlier than when the price actually has come back to this area. So this equilibrium order block here that the price has formed, okay, over here. Let's go over here. Let's go over to the downside here. We have these two options of what the price can either do. Now, the reason why I'm proponent for the downside one more time is not because I think that the dollar index is bearish, far from it. I think the dollar index has one more major bullish move up its sleeve before we have a major short. But the price coming back again to this equilibrium order block means that we're at a crossroads, right? The crossroad is that if we have a H4 body close above this area and the price continues going long, we're going from discount pricing into premium pricing, which means in terms of buying, it wouldn't be suitable prices to buy the dollar index at. Okay, all of the best buying should have been below equilibrium. Above equilibrium, it wouldn't be conducive for buying, but it would be a discount for selling. Okay, so as the price goes as long as the price is bullish, then the price will continue to go long. But the selling pressure will start to increase when the price gets above equilibrium, simply because in the direction that we're looking at, which is, if I go back to the weekly, this bullish range, if you're on the other side of the story, if you're a buyer in this market, if it becomes expensive for you to buy, it means it's conducive for the seller to sell. Reason being is that, think about it, if you wanted to buy the dollar index at $101, let's say you're selling, first of all, you bought low at $90, and the higher the price goes the higher the price goes up, if you're a seller from where you bought it, the more profit you're going to get when you sell it off for, the asset that you want. But if you're a buyer, the higher the price goes up, the more expensive it gets for you. The lower the price is, the cheaper it is for you. But then for the seller, the lower the price is, the less profit they're going to get out, or maybe they might even take a loss depending on where they got in. So if you get that concept, then you understand that where we are right now, in the grand scheme of things on the daily time frame, it doesn't really look like much. For the weekly, it just looks like the price is in a rounding spot. But using the premium discount price action range that we're looking at, you can see that this order block here has been hit to the T. Okay. And it's not a surprise that it's formed exactly at equilibrium. I think this is probably one of my favorite Fibonacci's I've ever drawn because it's very, very accurate. Okay. This order block sits here absolutely perfectly to the penny, to the pip, whatever one you want to call it. Okay. Now, with that being said, okay, what do we do next? So in this case right now, let me just, I want to keep a screenshot of this as well. All right. So at the stage that we are right now, when it comes to this equilibrium order block, we need to kind of pay attention to what the price is going to do. Now, it's happened that the price has got here on a Tuesday. And the next major US piece of news is not until Thursday. Okay. So with all of that information being said, or what we have going on, it's pretty interesting that we've got here before the Wednesday moment in the market. Now, Wednesdays, for those of you who've been trading for a while, you know that that's usually when we have a lot of reversals, or a lot of the major news that comes out in the week comes out from Wednesday onwards. We do have some on Tuesday, but Wednesday is really where things start to kick off. Now, my thing is that I want to observe what the price is going to do. Now, we have a few options that I would like to see. Now, the high of this movement here that we've got going on, if the price was to take the high of this previous weekly high here, now it's not the previous week's high, it's just an adjacent one. So it's a previous weekly high, but just not the previous weekly high. So this swing high was formed on the 10th of July. Okay. If the price takes this high and we have a wick close and not a body close above this high, this may initiate a trade that will give us a short down here. Now I'm looking from the H4 perspective. We can of course take this down and look at the lower time frame perspectives here. So what I can do here is, if I still USD CAD for a minute, or I'll just open up another dollar index one, we can compare the time frames to kind of figure out what we're doing over here. So if I go over here to the H1, I'm going to just put this here, standard, right? Okay, so again, I'm going to put the equilibrium order block over here. I won't even put the Fibonacci because I don't think it's needed. And let's just observe what the price has done. Okay, so far on the D1, like we spoke about last time, this is the last major move that we had that fell into this D1 VP range here. Okay. On the D1 over here. Okay, H4, H1. On the D1 over here, we have this movement going on. The price actually used this supply flip zone to the left on the H1. This is where it derived liquidity from. Just in case you're wondering why the price just randomly went here, there's always an order block somewhere. And this is the one that the price used, okay? So let's just take this into a blue color here. All right, so this is the reaction that we had. If I make this line a little bit smaller, this is the exact movement here. This was the induction here. Now, because this movement happened so quickly after returning into here, we have liquidity gaps left behind. The price tried to get back here, but couldn't, which means that there is room for downside movement. And at the moment, if I follow the highs that we have here, we have higher highs, but this is becoming a buy order aggregate right here. Looking at the swings that we have. So tomorrow, because Wednesday's usually where reversals start from, we have the Australian dollar news, or an US dollar news, which is the ADP news. I guess that's what I was thinking, Australian, because of the A. But we have the American Department of Payrolls, which manages about 60% of the payrolls in the US. And as a result of that news, one of the ways that fundamental traders do use that news, and if you're wanting to know where that news is, let me just quickly show you here. I'm going to pull it up on, yeah, I'll pull it up here. So let me pull it up over here. So I'll pull it up over here. The ADP news that we've got going on is on Wednesday. And if I scroll this up here, here we go. So ADP news employment change. Now, the ADP, which is the American Department of Payroll, is approximately 60%, so more than half of the employment change that we've got going on, or the management of payrolls, is done by this department here. Okay, and because it is done by this department, what you'll find is that a lot of fundamental traders will use this as a pointer to find out what's actually going to happen with the NFP results. Okay, this is really what the news is all about. So the reason why it's high impact is because if this was less than a 60% or less than 50% representation of payrolls, then it wouldn't really carry that much weight. It would probably be a medium impact news. Okay, but because it's 60%, and which means that it's more than, it has a majority, this number can greatly influence what the NFPs may be, possibly. Okay, now the other 40% hasn't been obviously accounted for until Friday. But the reason why, again, the market will be volatile is because if this number, for example, the expected, the previous payrolls is 497K, change in payrolls positively, is expected to be 188K for July. Now, if this actually comes out to be what it is, this is going to be an extremely negative result because it's worse than the previous. Okay, now if this is even lower than the expected, then it's going to be worse than the previous unexpected, which would be heavily bearish for the dollar. Now, if it's heavily bearish for the dollar and we have an extreme case where it's extremely bearish, then for people on Friday, they'll be looking for a bearish dollar and for a bearish output on the news. Okay, but now that's not always the case of what happens. But in this case, this is what we actually get. Okay, so in terms of news, the gravity of news in terms of scope of gravity towards price action, the ADP news is considered pretty highly, and this is why it is high impact. Okay, now why am I saying that? Now with price and time theory, if I go back to my Hugo's Way broker, at the moment the price has reached this equilibrium order block, and we're still at a crossroad because on the H4 the body of the candle hasn't closed above or beneath, it's just kind of rested in here. We have a wick closure, but nothing past that. Okay, now in the next, let's think about this. In the next 16 minutes though today, and I'll go back to the news one more time for you to see this. In the next 16 minutes, we do have another high impact piece of news coming out. We've just had one, which is the medium or low impact news for the S&P Global Manufacturing Preliminary Manufacturing Index. But we have a high impact one that's coming in at 3 o'clock, which is the ISM version of the manufacturing PMI. Okay, and the ISM is the Institute of Supply Management or Supply Management. If this number at the moment, this number is well below 50, so it's actually already bearish. Okay, now from 46 to 46.5 may give a little bit of a bullish boost, maybe, or just a flat reaction. If this number 46 and 46.5 is beaten by another number, and let's say it comes out to be 48 or 49 or even 50, I'll be extremely bullish for it would be extremely bullish for the dollar. So putting those things into perspective here, what I would say to you is that this price action that we've got going on, that's going to happen at 3 o'clock, will be definitely have, this news will have an influence on it, is what I'm trying to say. So if we come back over to where we are right now, you can see the price is spiking around everywhere, but we don't really have much going on per se yet. At 3 o'clock, and this is important here in terms of time and price theory, the 3 o'clock news will still be within this candle. Now, this H4 candle we have here, if you see at the bottom, my market time says 1500 hours or 3 o'clock, which means in the UK time, that is 1 o'clock, because server time is always 2 hours back for us anyway. So the next candle or the next H4 candle won't appear till 5 o'clock, which is 1900 hours. So the news is going to happen within this candle. So even though the news might spike above and beneath is what I want to put across to you, it doesn't actually mean that we're going to have a break above here or break down beneath here. We're still going to have to wait until the next H4 candle to know what to happen. And what we're simply waiting for is if we have a strong close above or we have a wick close above and the price decides to reverse. That will help us to have an understanding of what we'll see tomorrow. Now, for me, in a situation like this, as I have here, the highs and lows of The lows of the previous days and the high of today are really in my view. And between today and tomorrow, I'll be watching to see how the dollar index performs based on what we have going on today. All right. Now, the price may straight reverse and just go short. We don't know what's going to happen in the next 13 minutes. But either way, looking at time and price theory, the probability of a major move happening around the times of news is very high, simply because there's going to be a high amount of volatility, which puts the market makers in a position where they have room to do quite a few things: take out stop losses, trigger buy stops and sell stops, implement new orders into the market. All of that volatility allows them to mask their operations pretty well. So all the spikes we see in that seemingly are random are not random, but they'll also be positioned and placed in a way that will set the price up for the next major movement. So spiking above the highs and then the body closing here will set us up for a nice sell, fill out this liquidity gap and maybe see the price again. As I said to you, the only thing I'm not comfortable with, even though I'm very comfortable with the fact that the dollar will go long, and just to remind you, look at what we had on the monthly, look at the monthly close we had, guys, just to put it out there. It looked like the dollar was going to go for a short, right? But I told you this order block is very powerful. Look where the body of the candle closed for this month. It closed within this demand zone area here. We just had a long wick outside of this area. So if you want to think of it in another way, to me, how I see this is that if you're looking at this area and buying, the price just came to stop you out before it's going to launch for a long. But of course, the only problem I have with, again, which is why I'm looking at that short one more time, is simply because of this inefficiency here. Now, as I said, with liquidity gaps, like we talked about yesterday, especially the higher you go up in time frame, so weekly and monthly, they may not get filled out immediately. They may be left out behind for even years, like the case study of Euro USD. All right. But again, when I look at the price action from this standpoint here on the H4, if you look at what we have here, this reaction here that gave us the reversal, this induction, my only problem is that I wish it came into the weekly order block underneath. So to me, this is unfulfilled efficiency, and why I'm thinking that we may get a situation where we have a fast strike down here to run this low, weekly low here, and also get into this order block and then a fast strike up the other way. Okay. So this is really my point of view when it comes to the dollar index. So looking at this, we can actually have a look at other pairs and see what's happening with them. Now, my favorite pairs, to be fair, this week. Now, remember I spoke about Euro USD, and it did this lovely movement here on the H4, where it entered into this nice order block right here, and then started to go long on the D1 break of market structure. And now it's come back into the origin zone that it started from. Now, personally, I wouldn't take this long, but if it does work out, it would be a good long, because you can see we have a liquidity void, a very strong liquidity void until this price level right here. So if the 3 o'clock news would like to be nice to us, we might end up pushing Euro USD long, which means that the dollar will come out a little bit weaker right now, because for Euro USD to go long, the dollar will have to be weaker than the euro in from this day point of view, and then start to push for a long here. So that might end up being good as a trade, but I still want to trade yet. I just want to observe for now. All right, AUD USD, as I said to you guys yesterday, that I'm interested in this low here, and the price has come really close. Now, what's helped AUD USD to do this is because we had Australian dollar news, the interest rate decision yesterday, or this morning at 5:30 UK time. It allowed for the price to be able to have more of a room to get down here. And what I'm actually looking for is not really this low, but the low of last month, which is not too far away. Because these equal highs, especially the equal highs of the month and then the monthly equal highs themselves, or relatively equal highs, are still in my scope or view that they will be ran. That will have one more kind of bearish move that should push AUD USD even back up to here before the major sell that should come into the market. All right. Pound USD, more interestingly here, has actually closed beneath where it took off from for this long. And I know the reason why. Now, if you remember yesterday, the problem with this move is that even though it did a great distribution here, because we had wick closures above the swing high and not body, and if I drag this across here, you see that we had no body closures above this high. We didn't have a market structure break. And hence why, and this is a learning curve for you, if you ever see this kind of movement of an induction, then a distribution, price moves away from the area. If the body of the candle doesn't close above the swing high, we don't have a break of market structure. All right. So whatever you would do is that instead, if you see wick closures above a high, should be looking to sell down the other way as a continuation. Okay. Because if you see the highest wick up here, which is this one right here, all it really did was come over to this flip zone here. Okay. That's all it did. Came back into the nearest flip zone it could use and then just went down for a continuation short. So seeing this now and going over to the H4, now that the price has taken the weekly low here, now I guess you could say that the price will do a move, but there's also a weekly low here. It's a bit too congested. There's many lows down here. So I'm not convinced that the price is actually just going to go for, a long or a short. I think that in the case of Pound USD, because there's news on Thursday, we might even get a slightly different price action movements than other dollar pairs. Okay, so that's that. Now USD CHF. Let me go over to the D1, then the H4. USD CHF today hasn't done anything substantial apart from a short long with a little gap. Maybe the price might pull down because we have a huge liquidity void that the price hasn't gone for and a few lows down here. And that's what the price will be working for. But again, I would like to see a bit more from the price. Now, on the H4, interestingly enough, with USD CHF, if I draw this supply zone to the left, even though it's small, you can see here that the price is not randomly just kind of shooting out of nowhere and going for a short. There is a supply order block that's controlling this sell-off here, which is this. Now, there's two options. The news is coming out in 7 minutes. The price has formed a manipulation bar here, these two pair of candles. And then also the high of the day right now is over here. My interest will be, will the price just sell off straight away or will it give us a spike long and short? But for definite, I know that USD CHF is probably going to give us a short. If you see this liquidity gap here, which from the current price area is already 168 pips. So let's see, what the price is going to do from that standpoint. And hopefully you'll be able to produce a good trade out of it. Because for me, I think that this will be a really lovely sell. Let's see what the news does at 3 o'clock. It may actually be the trigger to just make everything rally down. Who knows? But I know for a fact that USD CHF is definitely going to pull back these number of pips to this gap. Okay, there's quite a few obvious inefficiencies here that make me know that the dollar is going to lose strength soon. So, I mean, looking at the major pairs, especially the ones that have the highest affinity to the dollar index, which is USD CHF, it has the highest affinity by default to the dollar index. I would like to see what the price is going to do here. So that's that point. Let's look at some others. Now, I'm also interested in Japanese yen pairs, and I've been sharing with the academy students my idea. I showed you guys yesterday one of them, which was a USD. Yeah, it was a USD pound Japanese yen pair, I believe. Yeah. Now with the pound Japanese yen pair, I still think that the Japanese yen pairs are going to give us a short sooner or later. Okay, some sooner than others. Okay, like AUD JPY has already started to sell off, and it had a head start because of the Australian dollar news, the interest rate news. But again, the idea looking at this was we have this high here, which was also equal highs. None of these highs here returned to this supply zone before giving us this massive sell, which is, I guess, one reason why it was easier for it to rebound up so quickly and even close above where the highest swing point for the sell was in the first place. And now the price is kind of making it, some swing high and swing low movements inside of this area. But I'm still of the conviction, or I'm still convinced that the price is going to go for a short. Now, if I draw this supply zone over here, if you don't want to use the other one, the price is still in the optimal area of selling. Even if I put the Fibonacci on here, all right, the price is above 86 or just around about 86 right now. So it's really in the deepest levels of discount pricing you can get. To me, I think it's only a matter of time before it sells off, unless the price maybe want to do something where it wants to take the high of the previous month first and then sell off. Now, the reason why I'm interested in this is because pound Japanese yen, I know for a fact it wants to sell. However, pound Japanese yen at the moment is sitting inside of a very important supply zone over here. If you've been wondering why Japanese yen, or some of the Japanese yen pairs have just been rallying, Well, one of the reasons, apart from economic reasons, from a technical side, is to fill out this major liquidity void, which was left behind a few years back, to be specific, 8 years ago. All right. Now, the end of the liquidity void is actually this point right here. And to be more specific, the low is 183,920. So if I just change this, 183,920. Now, when I do this and I add on the weekly price action, you can see that right now we're sitting on a very important area, which is a monthly validation point, as I call it, and also an area of heavy supply. So this sell-off that happened already, it was just kind of like a taster, but I do believe that pound Japanese yen is going to give us a very strong sell. And the sell should at least take the low of this movement here at the low. But ideally, what I'm targeting is the next area of demand, and also these equal lows not too far away right here, because we have an accumulation of buy orders here, or buy order aggregate in this range here. This trend line range is absolutely too perfect, which is algorithmically generated here. So I know that the price is probably going to give us a very big watershed of a sell. And that's why I'm not leaving pound Japanese yen alone. It did stop me out, which is fine. I didn't take a heavy risk on it, but I am still I'm still convinced that the price is going to go short. It's really just about the timing. So I'm waiting patiently to see how price behaves. If worst comes to worst here, I have, there's a few different ways to get into this. Now, the price action here is really, really weak. The candle bodies are really small. But if I go down to maybe the M15 here and just try to pick out a significant zone, we have a demand zone formed just before the new day. And over here, right, if the price was to break beneath here, which is where I'm going to set an alarm, I'll actually take the break and flip of this zone. So if the price did something like this and then returns the other way, when it comes back to the other way, I'll be looking to take an opportunity here and ride this down. Okay. So I'm actually going to set an alarm like this. Now, I'm sure there's going to be a much better and clever way to get into this, but this is just a very plain blank way I believe we're going to get into this. And I'm giving you a trade that I'm giving to my students that I'll be working with them on. And to me, I think that pound Japanese yen offers a brilliant opportunity to really get some good price action going here. Oh, let's go, mate. I concur. All right, cool. Send a message here. All right. So brilliant stuff. Good to see you on Abs. All right. Good to see you on, guys. Invite more of your people to come on as well. Whoever your trader friends, that would be great. All right. So this is really what I'm looking for when it comes to the pound Japanese yen. I think that we have a great opportunity. Now it's 3 o'clock. Okay. Pound Japanese yen, you can see it's starting to wake up a little bit. Let's see what's happened with Euro USD. All right. So the dollar index is, again, not done that much yet, but just give it a second for it to wake up. So you can see the dollar index is pushing short at the moment. All right, USD CAD is not doing anything important. It looks as though Euro USD is probably going to take off out of the gate and probably fill this liquidity void here. That would be pretty cool. AUD USD has not done anything yet. Okay, USD CHF. So here you go, guys. This is what I was talking about. So you see that USD CHF is selling off from this zone. Now, I still don't buy it yet. Not physically buying it, as in I don't believe in the price action yet, just because it's already gapped down over here. So if the market is going to leave this gap for a long time, that will be interesting. But I think the price is probably going to resume to taking this high anyway. All right. The reaction is not that strong. But again, we can have a look at the news and quickly see what actually happens. So if I go over here, let's look at the news right now. So here we go, guys. Nothing spectacular about the news. If you look at the high impact one, which is the main concentration here, the expected was 46.5. It came out at 46.4. The previous was 46, right? So it's better than the previous, but not better than expected. So that's why it's still red. It's still bearish. Okay, but the reaction is not that massive because it was widely expected, but at least it's better than the previous, which is not bad either. So that kind of sentiment there is why, we're not really having a strong reaction as you would probably expect. Okay. So this is why the price has spiked down and nothing really much is going to happen after this in the next couple of minutes. So we can continue with our analysis. All right. But you get the picture, guys, of what I'm looking for. I think that pound Japanese yen is going to be a great opportunity, and I'm not going to let it go until I get the price to get here and give us something. Okay. Now, whenever the price accumulates like this, it means that there's orders being built and sooner or later it's going to fall into place. All right, now I want to do a quick case study. If we look at other Japanese yen pairs really quickly, and I just go to a few, they've all kind of lined up in the same way. Now, some have made new all-time highs, so it'll be a little bit difficult to make reference points with all of them. But for example, if Euro JPY, let's just go to the daily time frame. Euro JPY at least has one short in it. I would say the high of the previous month is here. It's taken that high of the previous month and had a reaction from it. And all the price has really done right now is that it has, and this is a key here, before the price took the high, whenever I look at market structure break, I always want to look at swing lows and swing highs that were formed before the price took a high or a low. Now, the last swing low, or the last two, before the price actually made this movement, one is over here. This is the closest one. And the one I really like, okay, is over here. And you can see that the bodies of these two candles on the daily have closed beneath these lows. So this is actually a break of market structure here. Now, I'm not expecting Euro JPY to do the craziest move. Probably even just going for the low of last month, or even just filling this liquidity void around about 149 is good enough for me. However, the price breaking market structure and coming back to supply gives me confidence that we should be going for a short soon, okay? Even if the price decides that in this month, we're going to go for the high of the previous month again first. Now, if I draw the principal supply order block here, or if you want to do it this way, this is actually the principal supply order block. I mean, I don't actually have to put Fibonacci on because this is probably beyond 86 right now. This is probably a deep pullback. Yeah, so it's just off the cusp of 86, so just above it. Let's go over to the H4. And you can see that, I mean, looking at this at the moment, we are in heavy supply, and sooner or later we should get a short. Now, this H4 order block is so big that we can try to isolate it down to the H1 and cage the price. And if we cage it, we can cage it down to the H1 over here. Now, when we cage it, we can actually follow through with the order flow and actually put the supply order block over here. So the major form of concentration that we should be having, or the major area of concentration, is this second order block here. So I want to delete the first. Now, as soon as I do this, you'll notice something here. That the reason why the price isn't didn't move yesterday and actually still push along today is because it actually didn't return to the supply zone just yet. So actually, we have unfulfilled efficiency here. And as the price is creeping along here long, if it gets into here and takes this high and closes with a wick, then that can be the entry for a massive short that should last at least another 600 pips down. So Japanese yen pairs could end up being our best friend this week if we do it right. Now, as I'm speaking here, you can see the price has just shot into this area. Now, unfortunately, but fortunately, we have to wait a whole hour for us to know how the price closes in this area. Because if you have a strong body closing in this area, we can't just go and say, yeah, we have a stop hunt or a reversal and let's go for a short. We're going to have to wait for the wick movement, okay? So with that being said, now the price has just walked into this area here. Let's give it an hour and see what happens around about 4 o'clock, yeah? All right, now I have an alarm going off on my terminal, which means that a move that I'm expecting to happen is going. Now, just to show you what I mean about news, look at this, guys. You see this? The news has come out and the price has absolutely reversed on USD CHF because they're not ready to go short yet. I think they're saving it for the next day. Now, let me just check my alarm to see which alert that is for. Okay, I think that's Euro JPY. Okay, I had the alert on my other broker too, so I'll delete that. All right. So, guys, I mean, with the Japanese yen pairs, I'm eyeing up these positions here because they actually are pretty good. All right, there are pretty good stuff that's going on here. So for me, I am very much of the opinion that we should have some sort of trade soon. Okay, so for me, I never like to trade on the new month just because I know that market makers think in this way, and so do traders. That traders think, well, it's a new month, new me, new profit. They go in all guns blazing and then they get messed up. All right, whereas with market makers, they see it as an opportunity to make easy money from people who are hungry to get profit or they're in a rush to get profit. Okay, so this is why I don't like to trade on the first of the month, because in my experience, it's always been, now my experience has been good and bad, but it's more just looking at the way the price action moves. Remember, the futures market is very closely related to the Forex market. And every first of the month, we have new futures contracts that are being generated and ones that have been terminated. So that movement, locking of money, the release of money, all of that flow of liquidity into the market and in and out of the market causes a lot of spikes and volatility. So that's another reason, if I want to take it a bit deeper with you guys, why I don't trade the beginning of the month or the week. I don't like to trade the beginnings or the ends of things because of futures contracts, especially. And that does have an effect on the flow of money in the market. So anyway, now that we've kind of got into this scenario here, I actually believe the price is probably going to short now, but I'm just trying to stay away from temptation to get in already. But just looking at these pairs here, it looks pretty clear that sooner or later we are going to have a sell. But I'd rather wait for the market structure break and not be greedy, even though I know the price is probably going to do these things. All right. So again, you can see USD CHF is unscathed by the news. Neither is everything else is unscathed by the news. And this is why I kind of didn't want to trade Euro USD, because it's closing too close to the end of this order block too. And now it's spiked and gone the other way. So we'll see anyway, guys. I mean, I'll pull up a few more case studies here just to look at the Japanese yen pairs in detail, because I think they're just providing very, very good opportunities here. All right. So if I go over and we look at some other ones here on the monthly. Now, on the monthly NZD-JPY, because there's New Zealand dollar news today at 11:45 UK time, it might help us to probably get a bigger move going. But if I look at this carefully, it looks as though the wick of this candle has actually come just about into the supply zone here. We do. So if I draw this across here, a very long-term supply order block that hasn't been filled out. Now, that's not the only unfulfilled deficiencies yet to be filled. We have another one up here that hasn't been filled. So sooner or later, the price will continue going long. But in the meantime, there is a lot of room, you know, looking at the swing lows that we have, where the price does have to do a healthy short very soon. All right. And I believe that by doing that, all of these lows that we have here, let's put this out here. We have 1, 2, 3. All of these lows that we have resting here, ideally should be taken out and the price should come back to some proper demand, fill this unfulfilled deficiency, and then continue long. So I'm very much of the opinion that, you know, Japanese yen pairs have been pushing long, but I do think that the more I look at this, I see that there is a reversal coming soon. Now, in the case of NZD JPY, the principal order block is actually up over here. So we may actually get the price pushing slightly further long. There is a gap here that the price is wicked over. We have a few kind of price features here that make me think that probably price will maybe do its best to try to reach here maybe, which is another, let's see how many pips that is. That's another 81 pips, which I believe that the news today, which is unemployment rate, could easily do. It looks like more pips from the higher time frame, but it's only 80 pips. All right, so NZD USD NZD JPY could do it irrespective of other Japanese yen pair correlations, and then maybe proceed for a short in this manner. Now, it doesn't mean I'm going to trade NZD JPY, but that's just one kind of form of how we can get things going. All right, let's look at a few more. Now, AUD JPY is what I was talking about. Just to give you an example of what I'm saying with NZD pairs, AUD JPY has already started to sell off. It's already done 120 pips, and it has a head start just because of the news that came out, which is the interest rate decision. Okay. Let's look at other ones quickly here. Now, for me, scouting this, for me, pound Japanese yen is my favorite, but I am open to looking at others. CAD Japanese yen is kind of neither here nor there. I don't really like it as much. But one thing I would say is that since we had this reaction here and the price has broken structure, in its own way, it would need to pull back anyway for at least a pullback to the order block it originated from, and then it can go long. But I think my CAD Japanese yen is my least favorite. The other one I do like, which I'm just kind of giving you guys a plethora of options to go for, is Swiss franc Japanese yen, which earlier on has taken the high of the previous week, and it's also taken the high of this week over here, or just about. Okay. If I go over here, you'll see in a bit more detail that it's not in fact equal highs. This high has clearly taken this one. All right. And it's pulling back to the same area that it came from. So it wouldn't be too long from now that Swiss franc Japanese yen also would sell off. But Again, this is quite, in this case, this is subjective just because what if the Swiss franc doesn't want to do that and it does something else, as in USD CHF goes short? Because if USD CHF goes short, then Swiss franc Japanese yen should be going long. But again, this correlation I'm looking at seems to be something that specifically only Japanese yen pairs seem to be displaying. Okay. Now, looking again at what we've got here, these two lows are something I've always been, well, this low here specifically, but now this low has been added into the pile. I've always been wondering why the price hasn't taken the low yet, but this may be the opportunity where the price does a fast move down, doesn't have to do something crazy, and then immediately makes its way back up here, filling out all this unfulfilled efficiency. So whichever way you put it, Japanese yen pairs are projecting to possibly give us like at least 600 pips, which, I mean, if you're a funded trader or just a personal account trader or both, every option seems to be pretty tasty. All right. So ideally, I would say keep this in view when you're looking at the pairs, and let's see what the price gives us. Now, I have to wait, and you will have to wait as well until 4 o'clock, until the price kind of gives us an informational layout of what it's trying to do, which is code words for we need to wait for the wick of the candle to close above here, but not the body. And same thing for pound Japanese yen. We need to kind of give the price a bit of time to show its hands. No matter what's going on, we still need a break of market structure in some sense. In whichever way it happens, at least I'll say the H1 M30 is good. M15 is all right. Lower M5 and M1 market structure breaks for this scenario wouldn't be optimal. I think it's good to have a good, strong, higher time frame or higher up time frame from the M5 or M1 in your portfolio to see what price is going to do first, and then run with that. Okay, so this is really the broad overview of what I've got, guys. I hope you guys really enjoyed the session and you understand where I'm coming from. Tomorrow's news at 1:15, I'm expecting great things. And so keep your eyes out on the pairs that you have. You can leave some comments on what you're looking at, and I'll catch you guys tomorrow, same time. Take care. Have a great day, guys.